Last year, when most investors were watching their stocks plummet, one Wall Street legend had an unfair advantage that was identifying winning stocks with massive upside. Like Riot Blockchain before it shot up 10,090%, Digital Turbine before it shot up 789%, Overstock.com before it shot up 1,050%. This power gauge comes from the legendary Mark Chaikin. Right now, you can get a free in-depth look at how his power gauge system works. A way to type in any of 4,000 different tickers and see exactly where the stock is most likely to go next and in any type of market. Simply go to powergaugepreview.com for a free look. Again, that's powergaugepreview.com. Welcome to Making Money. This is Matt McCall. Thanks for joining me again, coming to you live from the annual Stansberry Research Alliance Conference. And the more people you meet, the more speakers I see, the more blown away I am. And I saw this gentleman speak earlier today. And I got to tell you, this is a topic Stansberry subscribers might be familiar with, but most people are not. And we're about to have a fascinating conversation here. Cormac Kinney, the founder of Diamond Standard. Thanks for joining us, Cormac.
Great to be here with you.
So, tell us what it is. I mean, I could try explaining it, but I want you to explain it to me. What is Diamond Standard?
So everyone, I'm sure you've heard of diamonds.
Sure. I happen to like them.
Everybody in the world knows diamonds are this extremely precious natural resource. But as an investor, you could never invest in diamonds because every diamond's a little bit different. So their carat weight, the color, the clarity, all have a huge impact on their value. And there's no price transparency. Mm-hmm. And if you wanted to buy and sell a diamond, the friction would wipe out any possible profit you could make. And therefore, diamonds have always been out of reach to investors, but they're this huge asset. Our solution, what I realized coming from a background of computer science and quantitative trading, was that I could use computer science to create a fungible diamond commodity where that would be the spot asset to set that price transparency and something that you could trade with a lot of liquidity.
So explain to our audience fungible.
Fungible, yeah, it's the foundation of what we do. These are two Diamond Standard coins. The diamonds are completely different, but they add up to be equivalent with all of those characteristics, the carat weight, the color, the clarity, which means these two are fungible. Whichever one you take, I'll take, they're the same.
Same exact value.
Same exact value, just like a gold bar.
Okay.
And because they have the same value, even coins that we make decades apart, they have to have the same geology.
Okay.
That's what makes them fungible. And if they're fungible, you can bid without worrying about the details of what's inside. There's one price for all coins.
So if I were to purchase one, what price am I paying right now for, what is there, eight beautiful diamonds in here?
All certified too. So just like gold, we don't set the price, right? A gold mine digs up gold, makes a bar. That bar has to be 999 pure, and it has to be 1,000 grams, for example. That's the geological standard. And then they find out after they make it, what's the market paying for gold?
Yeah.
We're the exact same. We have to make the exact same coins. We have to buy tens of thousands of diamonds to do it. And every day there's a spot price. Right now it's published on Bloomberg.
Okay.
And today it's, I think, 5,770.
Okay.
And that price
for this
goes
one
up and
coin
down.
right here, right?
Yeah.
Okay.
Goes up, it goes down, but they're all worth the same.
So do you have historical pricing on this? If you look back what the volatility was, are we close to a high? Are we off the highs? Like, where are we kind of now in the history of pricing of something like this?
Yeah. So we had to set the standard, and that by that I mean, what are the diamonds in here?
Yep.
We had to set that through an IPO, which was a regulated process. And we had to buy 30,000 diamonds to figure out the statistics. What's the frequency of all the different characteristics, color, clarity. But once we did that, once we knew the statistics of the sample, we were able to buy historical wholesale data for diamonds and go backwards.
Okay.
So we've gone back 20 years, and it's available on your data services and on our website. So we have 20 years of history if this existed,
Yes.
which it didn't.
Yep.
And similar to gold, if you remember in 2011 and 2012, gold hit the all-time high.
Yep.
And diamonds did also. Since then, diamonds came back down about 20%. But recently, actually more than, they came down about 50%. Recently, diamonds have gone up 40%
Wow.
in the last 2 years, in the same time that gold's really gone sideways.
Yeah, because gold is typically the inflation hedge that most investors turn to. And I'm anti-gold personally, and it has not been an inflation hedge. It's not done
Right.
what most people think. So you're saying these diamonds in general, should say, have been actually a really good inflation hedge.
Absolutely.
Yeah.
So in the last 2 years, diamonds have outperformed by 40% gold and silver.
Mm-hmm.
They've outperformed the S&P 500 by 15% in the last 2 years. And when you think about it, it makes sense because everyone knows diamonds, but for the last 50 years, nobody could invest in diamonds, at least professionals, and now they're suddenly available. So diamonds have a lot of catching up to do with precious metals like platinum.
Mm-hmm.
A lot of investors, especially institutions, own platinum.
Yep.
Turns out 17% of all the world's platinum is held by investors.
Wow.
But for diamonds, that number is only 1% to 2%.
Huge potential.
So we
Huge
think,
addressable market there.
exactly, we think that diamonds will catch up with platinum and palladium, meaning that 14% of diamonds, of all the diamonds in the world, will be bought by investors over the next, my guess is 7 years.
Wow. So say I wanted to buy this coin, right?
Yep.
I don't actually get this in the mail, do I? I mean, I own it online, right? But I don't, this is held somewhere in a vault backing up that? How does that work?
Actually, it's up to you.
Okay.
For Stansberry clients, we have over 1,000 Stansberry clients as investors. Stansberry clients are a little more often gold bugs than your usual man on the street or woman on the street. 10% of our Stansberry clients actually said, I want you to send that to me.
Wow.
And we'll absolutely send it to you. You have to be careful, though, because it's subject to sales tax.
Oh.
So if we ship it to you in New York, we have to collect almost 9% sales tax. So what we did for our clients is we set up a vault in Delaware with Brinks, which is giant, custodian. And Brinks, Delaware has no sales tax. So 95% on average of our clients hold their coins at Brinks in their name.
Okay.
It's not in our name, it's in their name.
So are you generating more of these every day?
Yes.
How does that work? What's the supply like?
So we're an agency for the investors. So investors come to us and they buy a new coin at the spot market. They just go to diamondstandard.co. It's a public website. And they pay whatever the current market is. We take their money. We're under regulatory supervision and we hold it in escrow. We use the investors' money. We obviously aggregate it all together. And we buy somewhere between 10 and 20,000 diamonds a week.
Wow.
We then have to bring those diamonds into the United States. We have to have them all inspected by gemological labs. And then we assemble the coins. It takes about a month to do all that assembly.
But are they locked in at that price that they paid?
Yes.
Okay, they're locked in at that price.
We take the risk. We charge a 3.5% fee through our exchange.
I was going to say there's obviously a risk there, right? Because a lot can happen in a month, number one. Number two, what if they come in and your gemologist look at it and like, it's not as good as I thought? I mean, does that ever happen where there's obviously some type of wiggle room, isn't there?
We actually, before we buy the diamonds, they're independently graded by the GIA, which is the most reputable lab. They have over 10,000 gemologists. And we buy all of our diamonds through an exchange that we built, the Diamond Standard Exchange. And we actually bid every week on 16 million different types of diamonds. I don't care what diamond you have, our exchange has a cash bid for you. And we can only buy diamonds through this regulated public process. And when they're received, we have a competing gem lab inspect them again. So they've already been graded, and then the competitor to GIA, they inspect the diamond again to make sure it's the right diamond. It wasn't chipped since it was graded, things like that. So I like to call it belt and suspenders.
So you mentioned taxes a moment ago. Can these be bought in a retirement account?
So a self-directed retirement account
self-directed, yeah.
can do a lot more things. If you're using an IRA on a platform like Millennium,
Sure.
they won't allow you to buy collectibles. And for that client, we actually started a fund in partnership with Horizon Kinetics, which is about a $9 billion asset manager. And it's called Diamond Standard Fund. It's for accredited investors only. But the fund just simply buys coins and bars and holds them and turns them into a share.
Okay.
So that you can hold them in an IRA.
Yeah, because that's important. How is this taxed? Say it's in a normal account, and I do very well. I make 50% in the next 5 years. What's my tax? I mean, obviously everybody's different, but how is this taxed?
So diamonds are actually a collectible, according to the IRS, very similar to gold, and except for U.S. government issued gold, which is an exception. But as a collectible, the IRS subjects diamond profits to a 28% capital gains tax.
Okay. Interesting. I mean, because it's, when something like this, if you're buying, you should probably have some money, number one. Number two, you want to think about taxes, where it's going to be.
Yeah.
And if you're an accredited investor, probably the best way to go, in my opinion, would be going through those shares, putting it in, a tax-deferred account, potentially. Yeah. I'm not telling people to do, but potentially.
The fund is very convenient.
Yeah.
Because if you own that coin, guess what? You have to pay for custody every year also.
Yeah. Yeah.
Or if you keep it at home, you have to worry about losing it, your housekeeper sealing it.
Yeah, there's no way I would take this home.
Yeah, well.
I would be, this wouldn't let, these guys have been in my house. I would lose this in a week. There's stuff everywhere. So there's no way. I do have a question. So last year, I was looking at buying a diamond. Thank God I did not. But I was looking at buying a diamond, and part of that, it was more about me. I'm like, I want a big diamond.
Oh, this is a diamond for you?
No, it was for somebody else, but it was more about me saying, that person didn't care about the diamond, the size as much. And I was like, I want the big ones, sparkly, so across the room and say, yeah, I bought that. More ego thing. Bottom line is, I started doing all this research, and I looked into some of the lab-grown diamonds. What is your view on that versus the old school diamonds?
Lab-grown diamonds are great. The problem is they don't hold their value. And they simply are printed out by these machines. And the good news is, although they look the same, lab-grown diamonds don't get through the gem labs. They can tell them instantly, and they won't give it a certificate.
So that's crazy because I believe you, obviously, not what I read on the internet. So it's stuff you read on the internet. They tell you, well, it's a same chemical makeup basically. And
Carbon.
You can't tell the difference, but you're saying they clearly can.
That's exactly right. Okay. So your girlfriend can't tell the difference.
Yeah.
But if she takes it to a gem
it's an
lab,
ex-girlfriend. No, but I'm kidding.
But a gem lab can tell.
Okay.
And I'll give you an example. You can buy a diamond ring from Zales. They will take it back for years as a trade-in. But they will not take back a lab-grown diamond on a trade-in because the moment you take it out of the store, its value falls to the floor. You could never resell.
Why is that? Is that just because this has just kind of been the standard for so long that people prefer this?
Real is rare.
More of a market for it? Yeah, more.
Real is rare. So
more
natural
scarcity.
Diamonds, are actually scarce.
Yeah.
It's lab-grown diamonds. You just press print.
The only reason that I was even leaning that way, and there's a stock called Brilliant Earth that's one of the leaders, is because this younger generation after me, is very ESG, very much anti-blood diamonds, that type of stuff. At least they pretend to say they are.
Yeah.
Who knows when it comes time to buy one if they're not. So that's kind of what got me going in my mind thinking about that. But I'm glad you clarified that for me because I had misinformation about that.
Well, that's what's interesting about this diamonds as an investment in general. There's a tremendous amount of misinformation. Diamonds are one of the greatest ESG stories out there. Natural diamonds. Blood diamonds haven't existed for decades. And the Kimberley process, we're enforcing it. So we're very much preventing it from ever happening again. But natural diamonds are extremely concentrated mines. They're not spread out. They don't use acids to extract the metals. They simply dig up rock, crush it, and find the diamonds. And once you have a diamond, those diamonds are $1.1 million per ounce if you were to weigh them. Yeah. So as far as the storage and transportation, dramatically much more efficient. But the biggest ESG story, I think, of all, is that we plan to buy 15% of the world's diamonds. That's about 12 years of production.
Wow.
There's no way we can buy 12 years of production. I have to buy diamonds from consumers. Mm-hmm. So the S in ESG stands for social. Mm-hmm. And what we're doing is we're buying back billions of dollars of diamonds from consumers that we think 1 billion households own that they don't use. Yeah. Either they're divorcees or they inherited from their great aunt, or it's jewelry they bought in the 90s that they don't wear. Yeah. We want to buy all those diamonds back and put them in these coins.
Show them the bar. I want to see the bar. That's really neat. I mean, not that the coin's not neat, but so you said this was kind of retail or spot price around 57.7 or so.
Yep.
And this one's around 57,000.
The bars are always 10 times, and you notice all the diamonds are larger in the bar than they are in the coin.
You can see the difference right there.
And and there aren't more diamonds; they're just all larger. And diamonds are exponential. As they get larger, they become dramatically more valuable.
So is it the cut that's considered round? Is that what that's called?
The shape.
A shape.
The shape is round.
Are they always round?
No, in these samples they're round, but actually we can use different shapes. Pear shape, radiant, emerald.
Really? Okay.
Yeah. Because it's not the diamond's fault what shape it got cut into.
Yeah.
What we're representing is the scarcity of the earth.
Okay.
That's why lab-grown diamonds, they're not scarce.
They're scarce, because not anybody, but anybody can set up a lab and have the funding, can
produce
buy the
machine.
Right? Yeah. So before I let you go, I always ask my guests, I call it the island question. What is the one investment, if I sent you, your family, your friends, whoever you want to take with you for 10 years to a beautiful island, can't have your phone, can't be connected, what's the one investment you want to have? I think I could probably answer that for you, right?
Yeah, obviously diamonds.
Yeah.
So what we think will happen, and we look at gold as the comparison. Gold relative to diamonds, gold went up 6x over 20 years, which is when the gold ETFs were launched. Mm-hmm. Gold ETF made it possible for everyone to invest in gold. We're now starting that process for diamonds. We think diamonds have the potential to go up 5 or 6x.
Wow.
So I think it's an excellent investment.
Well, then maybe I should hurry up and get married, huh? I don't want to be paying 5x for a diamond.
You can give her one of these.
Give you one of those, exactly. Hey, listen, we're going to put your website up there. If anybody wants more information, find out about this. I will tell you, you always ask about how to hedge my portfolio, how do I hedge inflation? And as Cormac just said, this has been the last 2 years, probably one of the best assets out there, hedging inflation.
With almost zero correlation.
That's unbelievable. Thank you so much for joining us. Again, check out down below if you want more information on Diamond Standard. Again, I'm Matt McCall. That was Cormac Kinney.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.